Okay, it's the 9th of Jan. It's a Thursday. We've got about 30 minutes to the NY Open. We're going to get to the charts in a second. Just want to check sound. Yeah, I think we're good. Yeah. All right, let's get to the charts. Okay, good. Okay, before we just a second. Yeah. All right. Before we proceed, let's just take a quick look at what we have today. Well, there's nothing today in terms of news. There's nothing. Thursday, there is nothing. Today's Thursday, right? Yeah, today's Thursday. There is nothing. Tomorrow is NFP. Last day of the week, NFP should bring in volume. We should have volume today. New York session technically should have volume today. There's a chance that it may not, but usually day before NY session, uh, the day before the NY session, the New York session, the day before, well, let me rephrase that. The day before, so the Thursday, the New York session that's on Thursday, right, usually brings in a bit of volume the day before the NY session. The London session tomorrow can be quiet, could be. Usually that happens. It can be quiet, right? Asian session can have volume, but the London session sometimes has less volume because in preparation for NFP, right? But today, technically, we should have some volume. There are no major news events today, so it should be a regular trading day. Okay, let's go to the charts. Let's go to our daily time frame. Right, exactly as expected, just as we've been expecting this week from the beginning of this week. I think I started the stream on Tuesday, right? Yeah. So since Tuesday, I think this was Monday, right? 6th. Yeah, this was Monday. This was Monday, price rejected, grab liquidity. I explained all of this on Tuesday. Grab liquidity closed above weekly support, which is 2633. I said we're heading to 2650 next. This is all the stuff I said on Tuesday. I said we're heading to 2650 next, and it did. And then I said once we get there, we should break this because this supply here is a reaction to this supply, right? This is the original supply zone that was created. A drop, two basing candles, and a drop, right, on the daily time frame. This supply zone was a reaction to this supply. Price dropped down, so this candle came, grabbed liquidity. I said when it comes back there for the second time, it's going to go straight through, and that's exactly what happened on the daily time frame, right? We came back there. This was on Wednesday, and this is Thursday. So price came there, touched that, rejected it on Thursday. Yesterday, I said price will go above 2650 and fill the daily candle wick. And that's exactly what happened yesterday. So price went up, filled the wick, and we've reached next weekly resistance of 2673, right? Now, when I go to the trading chart, I will explain the trade idea that I gave. We'll do the recap, and then we'll understand how the trade worked. Let's get to the trading chart. Okay, so before we drew the zones, I always do a recap of the previous day. So how we ended, or how we started the stream, and also how we ended, we were bullish, right? I don't always take a hard stance when it. Sorry, just a second. I don't always take a hard stance as a session trader. I don't say that today I'm bullish and I'm going to be looking for bulls. That's stupid. That makes no sense. If you're a session trader, your high time frame or your 4-hour or your daily can be bullish, but you can also, as a session trader, get a short trade or a sell trade, right? Because I'm trading within a session, a few hours within a session, not the entire session. I'm trading just 2 to 2.5 hours after the New York Open, right? So when I'm doing that, I can't hold on to a bias saying that I'm only going to look for longs or I'm only going to look for shorts. That makes no sense, right? The market will kind of tend to punish you if you have if you try to trade like that, right? As a session trader, you got to be flexible. You got to be agile to see what price is kind of printing and then act accordingly. So, but I had said yesterday, Price was above the EMAs. We had grabbed liquidity from this liquidity candle. If you watch yesterday's stream, I said there's a 5-minute liquidity candle here. Price came down, grabbed liquidity. If you go to the 1 hour, you'll see the liquidity grab very clearly on the 1 hour. When you see wicks like that during a specific time, not any time during the day. So during high volume time. Now there are several high volume times during the day, right? There is the Asian session, there is the Frankfurt session, that's an hour before the London Open. Then you have the London session. Then you have the pre-NY session. That's a 1 hour before the New York Open. Then you have the New York Open, right? And then you have the New York Stock Exchange Open. And then you have the London close, right? These are the high volume hours, right? That's the time volume comes in. So you got to mentally keep a track of that. At the beginning, it might be a little bit difficult, but as you trade and as you look at charts, it'll become more familiar, right? So this candle is a liquidity grab. The reason this candle is important is because it's a liquidity grab during a high volume time, right? It's during the pre-NY session. So an hour before New York was a liquidity grab. That's why it's so important. Grab liquidity, that means price is not coming under that candle again. It's not. So that's a very safe area to put your stop loss, right? Price is not coming, because if it comes there, that means it's very likely, probably the safest stop loss would be under the liquidity candle, as I always say, under the liquidity candle. So price can come to that liquidity candle at any time to grab liquidity to head up. But if it breaks this liquidity candle, that means there is no buys, right? Because once it breaks, it's coming down to the next area of liquidity. And where is the next area of liquidity? Either a light green area like this, a high liquidity zone that has a liquidity candle, or a weekly SR level. You can see this, so that's why take a screenshot of this. These areas are very important because this is what we always come back to in terms of entries and in terms of your TPs, where your TP should be. This is where price moves to. It grabs liquidity from one of these areas and goes to another one of these areas, right? That's what happens every day. So price came. I had taken a trade up here, but I also placed pending orders at 265152, at 2650, and they activated perfectly to the pip, right? This trade got triggered, this trade got triggered, and I had given you guys an aggressive stop loss as well. I said the safer stop loss would be under the liquidity candle, but I said if you want to be more aggressive, you can place your stop loss under the 30-minute candle. So I placed my stop loss under the 30-minute candle after the stream ended, and this trade got activated. So this had a risk of about 43 pips, and this one had a risk of about 29 pips, I think. Yeah, about 28, 29 pips. And the trade ran. These are the TP levels, the blue levels that I gave out. These are TP levels. I got out there. So that was a 7.5 RR trade in total, right? I got out there just a couple of hours ago, and that was 7.5 RR trade. I kept it because this is the risk that I was comfortable in taking. So I had no problem if price went down and stopped me out. No problem. That was the planned risk for the day, right? So I took that trade, and that's where I got out. You could have taken partial positions at any one of these areas, this, but we are heading towards 2682. That's the final TP I said. That's where we're heading to today. Okay, let's get rid of these and start with zones for the day. Yeah. Is my voice audible? Yeah. Okay. All right. Okay. So we've got supply here. I'm not going to redraw this because price hasn't come here yet, right? So we're going to extend this to the right. Ooh, sorry. What's happening? Okay. Yeah, so I'm not going to, I'd explained this already twice this week. This is a drop, four basin candles and a drop. Okay, that's supply zone right there, and there's a liquidity candle in that zone. I'm going to extend that to the right as well. Okay, extend this to the right. This price hasn't come there yet, so I'm not going to. It doesn't make sense in me deleting them and redrawing these lines. Okay, right. So let's start with. Okay, I am going to look at this area, right? I'm going to look at this area. We're going to come back to this area. But for now, let's start with demand. Okay, let's start with demand because the idea is that we are heading up, we're pushing up, right? We could close above, if we close above 2673, then we could be heading up for the rest of the week for tomorrow as well. And the next, sorry, if we close above 2673 today, the daily candle close above 2673, then we've got this clean space to the left. Price can just push straight through, except for this wick here, which can cause a bit of problems because you can see that if you look to the left, that wick aligns with this wick here, right? So there is rejection there at that wick, right? We have to make note of that. There is a rejection there, and a rejection there. They're all exactly the same area, right? The exact same area. So we are going to take a look at that area. But so that area can cause some problems for us. We're going to look at that area and see if we have a zone there in a bit. But for now, let's look at demand. Okay, so we have a H4 bull candle that hasn't closed yet, so we can't use this as a base. Okay, but this is a base. We have a rally, a base, and a rally. So now what I'm going to have to do is, yeah, yeah, I'm going to delete this as well. Let's delete all of this. Let's start clean. Okay, let's relook at this area. This is a leg out candle. So that's a base right there. So drop, four basin candles and a rally. And then you have price come back into that demand zone, grab liquidity and push up. This candle. So drop, four basin candles and a rally, price comes, grab liquidity from that zone and from 2650 and pushes up. On its way, pushing up, we have a rally, a base and a rally, right? That's the next zone. Okay, rally, base, rally. Yeah, this is 200 pips away from current price. Yeah, I'm gonna have to extend this back up. Yeah, there was a zone here, I remember yesterday on the 1 hour. We're gonna have to redraw that properly. Hmm. Hmm. Okay, let's do this. It's too close to draw another one, so I'm gonna do that. Okay, so this should cover the downside. I'll explain it, don't worry. Yeah, that's 500 pips of downside, so we're covered for today. So that's the drop. I explained all of this yesterday, but I'll redo it again. This is the drop. These are that's all the base, right? Because these candles are side by side. They're all next to each other. They're inside a range. This is the range. It's a large range. It's almost a 290, 295 pip range. The candles are inside that. I explained this yesterday. So I consider that as a base, right? So that'll be the open 454, 454. Okay, and then price went up above 2650, came back in, tested that demand or that range, and pushed back up again, created another base, and left that base, the leg out, right? So this closes, let's put the numbers there, 316 and 530, 316, 530. Okay, and then price again did exactly what it did here, came back, tested the range or the zone, pushed back up again, created a close to 4 hour bull candle, created another base, and went up. So rally, base, rally again, right? So let's put the value there, 129, and the low is 556. 129, 556. Okay, done. Those are the demand levels to the downside, right? Now, price is not going to come down 500 or 600 pips today. We should be covered if it does, even if it does, okay? So that's the closest demand zone that I have for now, but we're going to take a look at this area a little later. Let's quickly look at supply. Now, I know I said that this is supply, that it is, but here, got to remember there was a supply zone here, right, that we deleted, right, because price broke above it. Now, you got to watch out for that supply zone because that supply zone is right at weekly resistance 2673. So you got to pay attention to it, right? Price can always close above and close back inside a zone. That retail traders call that a fake out, right? When price fakes out, it closes outside a zone, and then the next candle, maybe the next 30-minute candle or the next 1 hour candle, closes back inside the zone, right? Again, this needs to happen during high volume times for it to be important, okay? So let's take a look at this zone again. So we got to go down to the 1 hour for this. There's nothing on the 4 hour. Might even have to go down to the 30-minute. So this was the original zone, right? A drop, 3 basin candles, and a drop. And the high of that candle is 282, high 302. 302. Okay. Now we need to probably go down to the 30-minute. Yeah, there you go. That's the candle. That's the basin candle right there. Okay. It's clear on the 30-minute. So the open is 043, high is still the same. 043. Okay. You don't have to do this all the time, right? But that's the correct zone. That's how you draw the zone. And the reason two reasons why I redrew that zone even though price has broken through it. 2 reasons, right? 2 reasons for me. Number one, that H4 wick is important, right? Price, as I said, price can close above a zone. We are in high volume time right now. We are coming to the end of the pre-NY session and we're going to start with the NY open, right? So we are inside of high volume time. So we can have what I said can happen. Price can close above the supply zone and close back in, right? And create a fake out. So it catches all of those breakout traders who are trying to buy above a zone, right? Grab their stop losses and head the other way, right? That's possible. The other reason why I redrew the zone is I put the zone back on the chart is because it's at weekly resistance 2673. Remember this. Always come back to this. Here, point number 3. Weekly SR levels are very important, right? These are areas, five, I call them the fives. They're the 5 areas of liquidity where I find liquidity on a chart. Now, I'm not here to debate any other system or any other way of finding liquidity. That's not what I'm here to do. I'm here to trade the way I trade, okay? Um, so that's the reason I put that back. And as we saw on the 30-minute, there is a zone there, right? Now, we go to the 30-minute again. Prices tap that weekly resistance. We can always go close above and then close back below, right? Got to keep that in mind for today. Even though we are bullish, that can happen. Okay, so what I'm going to do, that's H4 supply, but I'm going to mark this for what it is, M30 supply, right? Because we saw the zone on the M30 time. It's actually it's a 4-hour zone, but that 4-hour zone has been kind of taken out, right? Price is broken above the 4-hour zone. So now I've drawn it on the 30 M30. You don't have to do this all the time. It doesn't happen all the time, but it's good to have this knowledge and to understand that if you do see a situation, if you do print the candles do print like this, what you should be doing. Okay. All right. Let's go back quickly. We've got about 10 minutes to the NY Open. Okay, let's take a look at this area. All right, now there is a pause there. When you have a base-in candle, these are base-in candles. I call these base-in candles. Why? Because they have more wick than body. Always remember that. When you have a breaker, it's called a breaker or a base-in candle. You have a leg in, you have a base-in candle, but you don't have a leg out yet because this candle has another 2 hours, 10 minutes to close. Okay, so but when we have something like that, we got to pay attention to it. So maybe on the 1 hour or the 30-minute, yeah, there is a base there. There is a base there. I can't ignore that. So I'm going to have to, hmm, maybe go down to the 30-minute would be better. Yeah, this will be the leg out. Very tight, very tight, very tight. Rally base. No, that's a base. Side by side base. Yeah, that's better. Okay, so that's the base. I'm cutting through this candle, but I can't help it. I'm going to have to do that because this is too much. Because that's a leg out. Yeah, let's use this candle. 675045. 675045. Okay. Now we got to bring this zone a little lower because it's overlapping. So this low is 045, 025. Okay, that's better. All right. So basically, I have taken that's a wick. See, on the 4 it makes sense. It's the wick. What did I say, Vixer? Liquidity grabs. It's grab liquidity. There is an area here, so price can come back here to grab liquidity to head up. It might not necessarily need to come to this zone. It can grab liquidity from here and go up. That's why when you see, I say this always. If you see something that looks like demand, investigate it more. Investigate it, because if it looks like demand, it probably is demand. Okay, right. So I'm going to keep that as for H4 demand. This is on the 1 hour, so this is be H1 demand. Okay, Right, done. So that's our demand zones and our supply zones that are closer to current price. Save this. Okay, high liquidity zones. Next step. Did this zone take out anything on the left? Yeah, it did. It has this zone that it took out, right? Yeah, it broke this. So that's a high liquidity zone. Okay, I hope that makes sense. If we look left, there's a supply zone there, and price has broken through it. So that's a high liquidity zone. Did this take out something to the left? Yes, it did. Um, there's supply right there, rally, base, two basin candles and a drop, and this move up, this candle here, this big bull candle took out that supply, right? So this too is a high liquidity zone. Okay. Then down here, did this take out something to the left? Yes, it did. This demand here took out this supply. Rally, base, drop was broken with this move up. So this too is a high liquidity zone. So that should be good enough for today. Yeah, we're good. Let me just extend this to the right. Okay, perfect. Um, and this is already a high liquidity zone because from marked from yesterday. Perfect. Let's just clean up the chart. The hell. Go on the 15-minute. Okay, good. Right. Next step, find the high liquidity candle. Now price is heading up. We already have the high liquidity candle marked here. We know where price is going. It's heading here, right? It's heading to 2690. That's where it's heading to. All right. Sorry. Okay, it's heading to 2690. But if price pulls back, where will it grab liquidity from this zone? Right? We've drawn two new zones, three new zones, in fact. Where can price grab liquidity? Is there a liquidity candle? So again, go down to the start from the 1 hour. That's the biggest candle there. That's a 63 pip candle. Sorry, 30-minute. It's still that candle right there, 49 pip candle. So also have this wick, 33 pip wick. Let's mark this candle out. Let's go down to the 15-minute and see if that candle is still valid. Is this candle 49 pips and this candle just 38 pips and this candle which is 35. So it's not that candle, it's this candle. Yeah, perfect. That's the candle. That's a liquidity candle, right? So put the numbers down: 622,130, 622,130. Okay, perfect, done. Next area. Again, start from the 1 hour. Here, liquidity grab, right? Look at the time, Asian session, liquidity grab. So yeah, this is the latter half of the somewhere towards the about inside the Asian session. So about 2.5 hours into the Asian session, or 2.5 to 3 2 hours. I think about 2 hours into the Asian session. 3 6, about 3 hours into the Asian session. Not that important though, but it is a wick. Let's look at it on the. Um, let's just mark it for now. Just inspect it on the 30-minute. Yeah, on the 30-minute, it's a candle. It's a 36 pip candle. This candle is smaller, 26. Let's go down to the 15. Yeah, same candle. Perfect. 34 pips. Okay, that's the candle. So high 928,589. 928,589. Okay, 2 minutes more for the NY Open. We are done. Right now we have our zones. Okay, down here, one more zone. Let's take a look at that as well. Um, Largest candle I see is this. Let's just mark it on the 1 hour first. Same process for everything. Exact same process for all the zones. Um, how much is that? That's 67 pips. Go down to the 30-minute. Yeah, 52. 52, yeah. Let's go down to the 15-minute. 36. Is there anything here? This is 60. Hmm. 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 Yeah, it'll have to be on the 30. Yeah, 30 is the tap here. 243,719. 243,719. Okay, done. These are from yesterday. Those stay the same. These are the 3 new liquidity candles that we have for today. And this is the NY Open. Right on time. Just save this. Okay, now we've done the prep work. I said the prep work takes about 30 minutes because I talk over everything I do. Otherwise, usually if I'm not streaming, if I don't trade on days that I don't stream. But if the on before I started my streams, prep work takes about 15 minutes. Sometimes 12, 10 to 12, between 10 and 15 minutes, right? Depending on how many zones I'm drawing. But because um, I do talk over everything I do, it takes a little longer. It takes, twice the time to do that. Now, okay, so we know that price is heading higher, right? At least that's the idea. The price is heading higher. Um, we've just created new support. M30 support has just been created. You can see a bearish candle there on the M30 time frame, and then the next candle is a bull candle, right? So price is heading high, but I can't buy because I have rules. And I've said this over and over again, right? I need to see a certain structure form. Okay, so the first 15-minute candle, I usually don't do anything. I just wait for the first 15-minute candle of the NY Open to close before I even read what's happening in terms of reading candles, right? Now, let me just explain this for those who are interested. There is a difference between reading candles and reading price. What we did here at the beginning was reading price. You have a macro understanding or an outline, an overall idea of where price is heading um, by understanding or seeing what candles, high time frame candles have done. So that's I'm reading price, right? So all the first 10 minutes that I spoke or 15 minutes that I spoke about the supply zone, price coming close and then coming down here, grabbing liquidity, that's reading price. Okay. Now, once you need to do that to understand where price is heading, have a outline in your head. You don't. That doesn't need to influence your trading decision, but it helps by having an overall idea of where price is going. Right. Reading price does not. What I do on the high time frame when I read price, that doesn't influence my decision of where I trade, where I enter, what direction. It doesn't do that. It doesn't influence me. But I need to have an overall idea. So that's reading price. Now here, I'm reading candles on the lower time frame. That's different, right? Now I'm reading candles. Now I'm seeing how candles are closing. Is this candle going to close back in the zone? Is it going to close back in the zone? I am in an uptrend. Am I going to sell when I see the first M15 candle, bearish candle close? Even if it closes back in the zone and closes below 2673? You can, but I won't. I need a bit more confirmation. I always said this, when you're counter trend trading, wait for higher time frame. At least if you're session trading, counter trend trading, and you're session trading, wait for M30 resistance to form, right? So me waiting for an M30 candle to form here, to reject this area close below here, that is me reading candles. That is me. And so in my head, I'm visualizing a certain candle. A M30 bear candle form here, below 2673. That shows me that it's rejecting 2673, right? Then now when I see that, then I can go look for my setup on the M15 time frame. That's reading specific candles. That's different to what I did earlier, right? I hope I explained that clearly. Um, but if it doesn't close, could we continue straight up? Yeah, of course it can. Price can do whatever it wants to do. It doesn't have to follow the rules that I've set for myself, right? Obviously not. So it can do whatever it wants to do. It can just create one big bull candle here and the next one and reach this zone. That's fine, right? And if it does reach it, I apply my same rules. If price comes here to this liquidity candle, I wait. I wait to see M30 resistance form and then look for my M15 setup and draw my fib and place my limit orders and my stop loss and my TPs and take my trade, right? Exact same thing. Now, if it pulls back here, can I get in on a buys? Yes, I can, because now I know price is bullish. I have one M15 candle that broke a low. I need to see a minimum of two after 1400 hours on my IC market server time. So that's 14. That's 1400 hours. After that, so that's basically why I say 1400, because that's the beginning of the pre-NY session. That's an hour before the NY open. That's because I'm interested in candles that are printing during volume hours. Going back to what I said before, I'm interested in looking at candles and how they print, but candles that are formed during high volume time. Hope that makes sense. Okay, so this candle, from this candle onwards, did this candle break a low? No, it didn't. This break a low? No, it didn't. This one did? No, it didn't. But this one did. So that's one. So I need to see another one come down, break some lows, grab liquidity. If it comes to this area, even better. That would be a better area to wait for a trade than trying to buy up here. Because that trade, if I get in on a trade here, that will give me better risk to reward, right? That always has to be top of mind, getting better risk to reward, right? Not just trying to take a trade for the sake of trading, taking a trade because it meets your rules, because it fits your playbook or whatever you want to call it. You also have to have risk to reward in mind, right? Those who those I how am I going to say this without um, anyway? I don't want to offend anybody, but negative RR trading does not work. I have been a trader for long enough to see that negative RR trading does not work. So you've got to always have that top of mind. That is it better to take, so when you have, like, let's say for example this zone was down here, right? Let's say this red box, this red rectangle was down here. Does it make sense for me to, even if I have a setup, if I get my setup, to take a buy trade when the zone, the next zone is right up there, just here? Makes no sense, because that's a very little, that's a very small, take profit. Or it's probably going to get me one to one RR, one RR trade, right? It's better to wait here. These are better areas to wait for trades, because we know the trajectory, we know price is heading up. So if you get in on a trade somewhere here, right, that's better RR. That's 180, 200 pip move. That's the kind of trades that you want to take, right? Not take these small moves that offer, right? You have let's say a 40 pip stop loss and a 40 pip TP. That's just 1 RR, right? So it's better to wait when you draw your zones. Wait patiently for price to come to areas that give you better RR, right? Now, having said that, if price does come here, and I do get an opportunity, I might take it. I haven't decided yet, but because I have one candle that has broken a low, if another candle comes down here and creates a setup, I might take it. Or I might wait for it to come down and wait for an M15 support to form. Not M30, but M15. Why? Because I'm trend trading. So when I'm trend trading, I can use M15 support to take a trade. But when I'm counter trend trading, I need to wait for a higher time frame confirmation of support or resistance form, right, to take that trade. Okay. All right. Okay, we got about 5 minutes for this candle to close. You got to just wait. Thins might pick up a little later on today, right? See, this is exactly what I explained just now. What I just said in the last couple of minutes is what exactly. If you look at yesterday's example, that's exactly what it was. Uh, that's why I had my limit orders here, right? I didn't just jump in, and I took one entry here that went and hit my TP, but the other orders I didn't load up on entries here, because price is moving up. I want to get, this is the area of liquidity that we had marked, and price did come there, get I got triggered, my limit orders got triggered, and that was the move up, right? A 220 pip move up. Those are the kind of trades that you want to take, that have a low risk, high reward, and a higher probability trade. Why high probability? Because you're taking trades based off this, right? At liquidity areas. That's the reason for high probability, right? You're not buying or selling in between two zones, in a range, in a middle, just because you feel like it. The reason for the high probability part is because you're doing whatever that you're doing it at these areas, right? And high risk, low risk, high reward is because you're waiting for the pullback, right? So you've seen the fib. When I draw the fib, when I draw my fib tool, um, right? You've seen this. I'm just, yeah, right? So I'm waiting for the pullback here, right? This is the area that I look to enter. Somewhere here or below this, somewhere here or below. That's where I look to enter, right? Yesterday's fib. If you watch yesterday's stream, I clearly explained it. Wait here in this area. From this point onwards, you can look to enter, right? And your stop loss can go under that fib at where the fib ends, or it can go under the liquidity candle, right? And if you're selling, exact same thing. And if you do enter in a place like that, so you're having a tighter risk, and then you're getting out somewhere there, right? So a better RR trade, right? If you get in somewhere here on a trade and put your stop loss, and you get out here, because this is the first place, this 1 RR level that's there, that's not marked there by chance. It's there for a very specific reason. That's exactly where price will head to, right? to 1 hour. If there's more volume, then it will head to 2 hour or 3 hour. But if you get in on an entry here and you get out here, that alone is a 3 hour trade. If you get in at an entry at the sniper entry, right, at this level, and you get out there, that's a 5 hour trade just by following the fib. Okay, so I'm not going to be doing anything right now because um, it's got a minute for this 15-minute candle to close, and it's unlikely that this candle is going to break any lows. And I'm not going to take any buys, right, at this level because I need to see, as I explained, I need to see another low break. And I'm not going to take any sells because there is no setup for sells, okay? So I'll be back in a bit, in a few minutes, because it's very likely that I'm going to have to wait. Sorry. It's very likely that I was saying that it's very likely that I'm going to have to wait for a while uh, to see a setup form. Okay, it's going to take some time. This candle is going to close probably above or below, it doesn't matter. If I'm going to take sells, I need to see M30 resistance form first to take a sell. I need to see M30 candle reject 2673. That's weekly resistance, right? 2673, that's weekly resistance. So I need to see a candle reject, 30-minute candle reject that for me to take a trade. Two six eight zero 2692. Yeah, so if you remember, I said at the beginning of the session, and when we were looking at the daily time frame, I said we got to watch out for this wick. Now, where this wick is exactly where the 4-hour zone is. So this wick aligns perfectly with the 4-hour zone. So that's the top of the wick is 2692. The open of the candle is 2680. Okay, and that's that zone, right? That is that zone. 2680, 2692, right? That's the zone. So that is a very important zone. So if you want to be a really patient trader, here's an idea. If you want to be a really patient trader, if you want higher RR on your trades, this is the area to wait for a trade. Not try to take a trade here. This is the area, right? Because look how that idea aligns, right? Rejection, rejection. At the same point, I'll just put another color here too. Yeah, that's fine. Okay. Look at the rejection, rejection, rejection again. All right. Rejected once, rejected twice, and rejected the third time. When you see these wicks, that's rejecting, right? Price, they at that area, it rejected that area between 2680 and 2692. So that's the area you want to take a sell to come down and get a fairly decent RR trade. That's the area to wait. And that area aligns perfectly with our 4-hour zone. Perfectly with that 4-hour zone right there. That's the area you want to take a sell. If you get in on sell there, very likely you can come down. You can get fairly good RR. You can take about maybe 200. You can probably get a 200 pip move down, coming down, or even more. Might get because this is a fairly big move down. That's a 1,000 pip move down. So you might get a lot more than that. If you get a right entry, you can. If you get a very good entry, you can turn that into a kind of a swing trade and hold it for the week, right? If price comes you get, and you can ride it down here. right? If you're a swing trader, you can write it down and don't close the trade during the session. Keep your stop loss probably where it is, or bring your stop loss to break even. And safer stop loss, as I said, is always above the liquidity candle, right? Once the liquidity candle breaks, where is price going? Next liquidity area. What's the next liquidity area? To 700, right? If the liquidity in this area is not enough, it'll break the high and continue up here. Okay, so that's the area to look for a sell trade, and then maybe ride it all the way down. Okay, so 30-minute candle, the 15-minute candle closed bearish, but closed above 2673. So means nothing. It just means that price is still bullish, and we have another break. Price has broken another low, right? So I'm going to pay attention to this. I'm going to watch this area now. I'm going to watch this area. Um, I'm not sure if I want to take a trade here. I'm going to wait for this candle to close. There's 11 minutes for the candle to close. So I'm going to wait for the candle to close, because we got to see if the candle is going to close bullish or going to close bearish and come down. If the candle closes bearish, that means the 30-minute candle is closing bearish. That means we are probably heading down. Okay, so we got to wait for the 15-minute candle to close. When the 15-minute candle close, that will be the close of the 30-minute candle. All right, I'll be back in a few minutes. Okay. About 3 minutes more for the candle to close. Now, this candle broke this low. Got to wait for this candle to close because we don't know. Maybe wait for until the last few seconds because you got 3 minutes. In 3 minutes, the candle can come all the way down. So we have to wait for the candle to close. It's very important, right? Now, it's likely that what's happening is, right? I don't want to read too much into this. That we are grabbing liquidity from 2673. Again here, see, we're grabbing, it's an area of liquidity, right? So price is grabbing liquidity or creating liquidity at 2673 to head up, okay? So let's wait maybe another minute more and then see how we can draw a fib. Okay. Mm. Okay, so about a minute more. So it's unlikely we're going to close bearish. We are heading up. That's fine. You can just draw a fib now. This low is 136. This high is 701. Okay, now let's see. Let's see. We got to wait for the candle to close. Can't do anything until the candle closes. Um, 30 minutes, the one icon is closed above this. 30-minute is bullish. 15-minute. I would have liked this setup if it happened somewhere here. Would have been better. This is a little risky, this trade, because price can always pull back. If the liquidity, I say this all the time, if the liquidity here is not enough, it can pull back. 1945 77 73. Let's place an order at 73. Stop loss is under this candle here, under the fib, under this candle. 30 minutes, yeah, under this candle. That's too much. Slow slippage. Okay, so I opened one order there. Yeah, Okay, so order triggered here. Stop loss goes under 71.36. TP up here, 2682, right? Yesterday we had marked this the same TP, 2682. That's the final TP I said. That's where price should be heading to, 2682. Okay, and just 2683. Yeah, 2682 or 2683, basically. That's where you'd want to get out, because beyond that there is this, which is it's unlikely the price is going to hit that high. We're going to get a reaction at 2682 or 2683. We've got a strong supply zone, 30-minute supply zone right there. So it's better 2682 or 2683 is better. Stop loss underneath this 30-minute candle right here. Now, here's how we manage risk. As much as it's important to do your prep work, read price, do your prep work, read candles, all of that is important. It's as important or even more important to manage risk, right? If you're bad at managing risk, or if you over risk, over trade, then trading is maybe not the right thing for you. So if a 30-minute candle closes or a 15-minute candle closes back, if a 15-minute candle closes back below 2673, I'm going to close everything, right? The 30-minute candles are closing above, creating higher highs and higher lows. Okay, 30 minutes, higher highs, higher lows. This is pre-NY candle, higher high, higher low. NY open, higher high, higher low, right? Now, if you break the high, then we're creating we've created another higher high, right? So we're anticipating price to head to 2682, and then 2683. 2683. Okay, that's my final TP areas. So that's about 80 pips, 90 pips if it heads to 2683, 80 pips if you head to 2682. Okay, so but now we're creating higher highs and higher lows on the 30-minute. If a 15-minute candle, you can see a 15-minute candle hasn't closed below 2673, right? You can see that. To the left, if you go to the left, this is why learning to read candles are very important. So you can, it'll help you manage risk better, right? So if you look left, there is nothing. Price has not come here, right? So this is the first time price is coming and trading above this area after a very long time. The last time price was here was on the 13th of December. Okay, so we're back at this area and above this area. So we haven't had a 15-minute candle close below 2673 since December 13th. If a 15-minute candle closes below 2673, it's likely that price doesn't have enough liquidity to head up. and it's coming down to grab more liquidity before it goes up again. So there's no need to hold the trade and continue to be in drawdown. You close your trades, right? So you lose less than what you had initially planned to lose, and then you wait at a liquidity area again, right? At the EMAs. Let me put up this chart again. At the EMAs or at the weekly SR level or at a supply demand zone, you wait at those areas for um, your setup to form, right? And then take the trade to go up. But if it has enough liquidity, if it's grabbed enough liquidity already from 2673, then you should see price heading to 2682, right? You know where price is going to. It's going to 2682. And that would make the daily candle get into that area, right? That's the area that we've been speaking about several times today. It's that wick, right? And that's where the TP is set at 26882. If you want to take partials, oops, sorry, just cancel. What did I do? 2682. This is a safe area to take partials. It's a safe area to take partials, 2680, right? So it's about 50 pips, not much. I would rather price come here. So I'm going to hold my trade until 2682. But if you have taken a larger position here, then you can probably take off. Maybe if you've taken a bigger position on your entries, you can take off maybe 25% of your trade off here. So if you are using any sort of trade manager that allows you to close partial positions, you can do so. And if now I've got this trade manager that I'm using, so if I click on the close 25%, it'll close 25% of the open positions, right? So, but I'm not going to do that because I've just opened two very small positions, and I'm going to hold these TP levels, right? Stop loss is under that, TP levels are there. So my risk on this is about 36 pips, and that is about 30 pips. Yeah. Okay. So we've got about 40 minutes, 50 minutes for the NYSE Open. So should have some volume now. This is the NY Open volume. So should have the 30 should have volume on this 30-minute candle, right? So there is about 19 minutes left for this candle to close. So this candle should have some volume in this candle, right? That's the candle after the NY Open. So that candle has some volume. But after that, things can slow down a bit until the NYSE Open. And then volume might come in after the NYSE Open. Like we saw that even yesterday, it moved up yesterday from the NY Open, yeah. But later on, at the NY, I think at the London close, we had a lot of volume coming down. And then price started inching its way up again from the entries. Now, if you watch yesterday's streams, I showed for those who wanted to sell. Again, if you watched yesterday, the end of the last 15 minutes of yesterday's stream or 15 minutes of the previous day's stream, either of those streams, I said exactly the same thing. For those who want to sell, wait for 30-minute resistance to form. So This was the first 30-minute resistance candle forming. Resistance has formed, but price continued to move up. And where did it move up? It moved higher into the liquidity candle. So if you watched yesterday's stream and if you took a trade and placed your stop loss, I always say the safest stop loss is if you're selling is above the liquidity candle, 3-4 pips depending on what your broker spread is on gold, 3-4 pips above the liquidity candle. Or if you're buying, the safest stop loss is below the liquidity candle, right? So if you had placed your stop loss, if you had sold on this candle or waited for price to get higher and sold inside this area, price did not break the liquidity candle. It came inside the liquidity candle and it did not break it, and the liquidity candle was somewhere above this. If you watched yesterday's stream, it would be very clear. And then you could have taken the trade down. And where did price come to? 2650 area of liquidity, touched it to the pip, right? So that was a great move down. That was 185, 175, 180 pip down. If you got in at that liquidity candle to come down, and you could have, because M30 resistance is formed. So technically you can take a trade. So you then, once you see this form, you take a trade based on however you take your entries. Stop loss, safe stop loss above the liquidity candle, and then write it down to the next area of liquidity, which is 2650 on the way down. Okay. Yeah, so 16 minutes for the 30-minute candle close. This candle should have liquidity in it should have volume in it to continue higher. But after that, things might slow down a bit. Let's look at the daily time frame. What size candles are these? We did this at the beginning of the week also, but let's do it again. So these candles are not that big. They're 300 pip candles. Yeah, 300 pip candles, 240. Today we've already done 220. Yes, today should have some volume. I said this at the beginning because today is the day the NY session that's before the NFP NY session. So today we should have, this candle should have some volume. So we should get to about 300 pips today. We've made about 225 pips today already. The average is about 340 pips, 350 pips. So we should be able to climb here easily, another 50 pips, easy. We should even go higher. Yeah, we should be able to get to 300 today. Should be able to get to 300 today. Huh. 2685. Yeah, 2685. So where is 2685? Let's look left. Hmm, 2685 aligns perfectly with this base. Ah, this is going to get broken. Price is going to go above this. Hmm. Yeah. Let's see if we can head to 2684, 2685 today. Again, I've explained how I'm going to manage risk, right? Very clearly. So if a 15-minute candle comes back and closes below 2673, I'm going to close everything. I don't care if price closes below 2673 and heads back up, so be it, and I miss out on the trade. But I have to follow my risk management rules, and my risk management rules are based off they're rules. They're not subjective. They're very objective rules, and they're based off price action, right? So there hasn't been a 15, as I said before, there hasn't been a 15-minute candle that has closed below 2673 as back as the 13th of December. So if I see a 15-minute candle close here, it's very likely price is heading down, right, to grab more liquidity to head higher, because there it probably isn't enough. It doesn't have enough momentum to go up. So it needs to grab more liquidity. So as soon as I see that, I'm going to close everything. And then just patiently wait for the next setup. Mm-hmm. Okay. Yeah, we've got this high is 76.94. Just put a line there. Hmm. Yeah, that's creating a bit of a problem, that wick, that 30-minute wick. It's visible even on the 1 hour. So that wick is just causing a bit of, because that wick is the top of a supply zone, right? Yeah. Drop, base, drop. Price came, couldn't fail to get back into that zone and push down. So there's a zone there. It's a smaller zone on a 30-minute time frame, but there is a zone there. And prices touch that wick, the top of the wick, and is pushing down. So it's important to understand why price has paused, right? You got to understand the why behind price movements. So prices paused there, stopped. It's trying to push back. Okay, so let's see. We need to see a candle close above this. So once we have a 15-minute candle close above 2676.94, 2677 basically, that's when you'll see the volume come in and take price up. Okay, that wick is we touched it once, we touched it here, touched it, we pushed back, we came again, we touched it, we broke above, and we're pushing again down. So it doesn't mean we got to do anything about it. You just have to understand why price has stopped here. Why is it slowed down? There's always a reason why when price stops or slows down or pauses or reverses or pulls back at areas. There's a reason for it. This is not random. So 2677, there's a wick there, 30-minute, there's a supply zone. Price stopped, pushed back, came back, broke above, and is rejecting again. So we have to wait, and it's still the same thing. As soon as I see a 15-minute candle close back below 2673, that's weekly resistance, I close everything. Again, for those who are looking to sell today, right? This is the same thing that we've been discussing throughout the week. For those who want to sell today, understand that you are counter trend trading. So wait for M30 resistance to form at one of these areas, right? Don't just take the first M5 or M15 bearish candle as a confirmation to sell. Wait for M30 resistance to form at one of those areas, liquidity areas, right? So one of those areas are right here. There is a 2673 is weekly resistance. There's a liquidity candle above here. So either here or here, wait for M30 resistance to form and then look to enter however you enter a trade, right? Because that'll also give you a place to place, that'll give you a more logical area or a level or a place or a price level where you can place your stop loss. When you when you when you're taking a trade, when you plan to take a trade, uh, these three components, where your entry goes, where your stop loss goes, and where your take profit goes, those three components are important. You have to think of them in advance before you take a trade. You don't randomly buy and then decide, and then after that figure out where am I going to place my stop loss and where am I going to place my TP, right? That's not how trading works. Before you take the trade, you got to have it mapped out in your head. Where is the stop loss going to be? That's the first thing. Where's the stop loss going to be on this trade? Is it too large? Is it going to be a 100 pip stop loss, or is it going to be a 25 or 35 or 45 pip stop loss or 50 pip stop loss? Then where is the TP going to be? Is the TP going to be a 10 pip TP, or is it going to be a 100 pip TP or a 50 pip TP? Now, does the risk to reward make sense when I'm taking the trade? Okay, am I just am I just randomly buying and selling from wherever I feel price is going in a certain direction, so let me just buy or let me just sell. So you got to think it through. There's a science to this. Probably coming back down. Let's look at the 1 hour. Yeah, probably coming back down to tap 2673 again, because if that is the level that price is using to grab liquidity, then um, it's okay, or it makes sense. More than makes sense, I think the right word is it can. It can come to that area of liquidity as many times as it needs to until it finds enough liquidity to go up, right? It can do that as many times as it needs to. So yeah, we've got about 3 minutes for the 1 hour candle to close. We are probably going to close a doji, a bullish or a bearish doji, very likely. So if it's a doji, that means it's a nothing candle, right? So that means it's not saying anything. The price can either go up after this or can go down. It means nothing. There's a 50% chance the price can go up, 50% chance the price can go down. So let's see. But if it closes, if the 15-minute candle closes below here, I'm closing everything, is what I said at the beginning. That means the 1 hour is closing below, right? And that means the 30-minute candle is closing below. So then I'm closing everything. Let's see, just 2 minutes more. Yeah, I think it's going to close below. If the 15-minute candle closes below, that means the 30-minute candle is also closing below weekly resistance, and also the 1 hour candle is closing below weekly resistance, right? At that point, I close everything. Yeah, very likely we're going to close below. Yeah, and we're coming further down for liquidity. So this is what I said. It's important to understand, to read candles, right? Yeah, so another minute, I'm going to wait, I'm going to wait another minute before I close my trades. But in that 1 minute, if price comes down and hit my stop loss, then so be it, that's fine. Because that's the risk that I'm willing to lose for a trade today, okay? So it's a pre-planned risk, but it's got to close below. If it doesn't close below, I'm not doing anything, right? I'm not doing anything. It needs to close below 2673. Yeah, likely we're going to close 40 seconds. Let's see. It's it's going to the wire on this. Going down to the wire. Usually if price is up here, then I could have said it's not going to close, but we're hovering around 2673. So you could either close up in the last couple of seconds or close below. It's going down to the wire. It needs to close below for me to close below, even by a pip, for me to close my trades. Yeah, it's closing below 5 seconds. Yeah, that's it. Closed it. So the 1 hour closed below, 30-minute closed below. Yeah. Yeah, closed everything exactly as I said. So I lost a very small risk because I didn't wait for price to come and hit my stop loss below. You can see now how price is pushing down, right? So, and now as soon as it breaks this low, if price breaks below 267136, then I remove the fib. That means price is heading down. See, it's as straightforward as that. I wouldn't say it's as simple as that because it takes time to be able to read candles and to manage risk, but it's very straightforward. Once you visualize it in your head, this is, if this happens, this is what I'm going to do, then you stick to that, right? You don't change it and say, oh no, price is coming down, maybe let me increase my stop loss, let me push my stop loss further down. No, that's bad risk management. You got to be able to manage risk in this business. So my stop losses were here, and I lost a lot less than what I had planned to lose. Okay, so now, do I have a sell trade? Um, we have a 30-minute candle close below resistance. Um, on the 15-minute, I have this candle broke this side, this candle broke this high. So technically, yes, can. Hmm. Hmm. Yeah, I want to see price break this candle low here, where I had the stop loss, this candle, this M30 candle. I want to see price break this, because once it break this, then that's confirmation that we're heading down. That's more confirmation. That's also, yeah, price has broken the 1 hour low, so we should be heading down, but this price hasn't grabbed enough liquidity yet, right? It hasn't. See, this 1 hour candle has no top wick, so the candle has about 56 minutes to close. It's got entirely almost an hour to close. So price can always pull back and then go down, because it needs to create a high wick before it heads down, if it is heading down. If it is to head down, it needs to create a high wick. Creating a high wick means it's grabbing more liquidity to head down, right? And where is it heading down to? To the liquidity candle. Okay, so you can take sells, because technically it's done what my playbook, I can take sells, because technically it's done what my plan tells me that it would do. It's closed below 2673, so but I just need the pullback. um, okay, so now we've broken this low. Perfect. So now I can get rid of that. Okay, now I can wait for a pullback. There's no need to rush, just wait for a pullback. I might get a pullback, I might not get a pullback. That's okay. As high as 822428 double two. Hmm. We've created resistance as well. We've created M30 resistance. So price is coming down, but I need I need to see price come. My stop loss, if I take sells, my stop loss is going to be above this candle here, right? So I need, because that's the, you see that 2676.94 or 2677? That's the reason for the rejection, right? And we have closed below 2673. So I've drawn my fib based on this candle here, because this candle broke this side. As I said, it needs to break a minimum of two highs. So this candle broke this side, this candle broke this side. So that rule is met. Now I need to see the pullback, right? I need to see a pullback above this area, maybe somewhere here would be great. The deeper it goes, better. The smaller the stop loss would be to come down. Maybe down here to this candle right here, 80, 90 pips coming down, right? But price has to pull back. So what I'm going to do is I'm going to place a pending order at weekly resistance 2673. Okay, that's one. I'm going to place a pending order here at 2676.1312. Yeah, let's go on the 5-minute, and then one here as well. 7695. 7686, sorry. Yeah. And stop loss above this candle, 2678.22. 2678. Okay. Okay, so 2673 order is triggered. Stop loss is above that. So this is the second trade of the day for me, and that's it. 2 trades a day, that's it. Nothing more than that. That's the limit. That's my limit for the day. Always 2 trades a day. If the first trade is a winner, then there is no more trading. But if the first trade is a loss, then I will give, depending if I manage risk well, if I've not lost my entire risk, then I will look for another logical rule-based trade setup like this, right, to take a trade. So TP would be down here. 4 candles still has an hour to close, so TP would be here at the liquidity candle that we marked. Yeah, so just above here. 6, 7. 6, 2, 6, 7. 2667. 60 pips. 90 pips if we come here. So if you go down to the 1 minute, that's the liquidity candle right there for this setup on the 1 minute. You can see that's the largest candle. So price can come to this candle at any time to head down. Just mark this candle for 1 minute. Double 7, 7, 7, 7, 7, 8, 5, 8, 2. Yeah, this is low. 75.48. 5.48. Yeah. Let's place an entry there. 75.48. Low 75.48. Okay, it's 2667. All right, so I hope it's clear what I did. That's a big, I said this, if soon as the 15-minute candle closes below, I'm going to close everything, closed everything. The close of the 15-minute candle was the close of the 30-minute candle and the 1 hour candle, right? So price 30-minute candle, we formed resistance. Price closed, price formed resistance, right? Closed below 2673. I drew the fib based on the 1 hour. We also formed 1 hour resistance because that was the close of the 1 hour candle, as I said. So we formed 30-minute resistance and 1 hour resistance, right? Bull candle, bear candle, close soon after that, below 2673. If you remember, if you guys remember, right at the beginning of the session, why I drew this zone, I said price can close back above and then close back in, and that's called a fake out. Retail traders call that a fake out. So this could be a fake out. That doesn't mean price has to come down. It could be a fake out and price can come down. And if it does, then it is a fake out. But if it doesn't, it's still a fake out, but it just didn't have enough volume to come down to the next liquidity area. That's all it means, right? So, but it shows the signs of a fake out. We've closed above, we've closed back in immediately. Inside high volume time. This is the New York Open. This is the pre-NY. So pre-NY closed above, NY Open closed back in. So inside volume time, it's happened at a zone, at weekly resistance. So price could come down, right? Stop loss is above the candle. Play these are pending orders. This was a pending order as well. All four were pending orders. One got triggered. TP is around 2667, and your next TP level would be here, 2665. Because the reason these levels are not, this is not guesswork. This is there is a reason for this. This is M15 support, right? So the closest round number just above support is 2665. There is also M30 support just underneath that, so that's a good area to have another TP level, and that's also right where the EMA is. Okay, so 2667, 2665 are good areas to take profit if price is to come down. There is no guarantee that it will. In trading, there are no guarantees, but we read price, we follow our rules, and we take trades, and then we wait for the market to do what it needs to do. Okay, how long have I been here? Oh, getting close to 2 hours. Okay, it's gonna slow down now. This is the 15 minutes to the NYSE Open. So things probably are gonna range until then. Volume might coming after the NYSE Open. I'm gonna be here for another 15 minutes and then gonna call it a day for the stream, but I'm gonna leave the trades open. Now, this is the liquidity wick that was created. So you got a price could come to that area, and where that liquidity wick is where the liquidity candle is also. This light red area, light pink area, or whatever you want to call it, is where the liquidity candle is. The liquidity candle is inside the liquidity wick, right? On the 5 minute is clear, that's the candle. So your price can come there. You got to allow, you got to wait, be patient. If price does come there, you got to be patient. That's why I've taken only one entry here, just above 2673, and the other entries are at that liquidity candle. So if price comes there, you got to allow it to come and do what it needs to do. Now if it comes in there and it goes straight through and breaks that high, then the setup didn't work. There's a probability of that was the probability of the trade not working. Every trade that you take has a probability of it working and a probability of it not working. And if you follow the same rules, the same logic every time, uh, that probability if of it not working or working is a part of your win-loss rate in your overall success, right? So if you have a 50% chance, if you have a 50% win rate or a 60% win rate, then the probability of this trade, of a particular trade not working, is your 40% losing rate, loss rate. I hope that makes sense. Okay, if you have a 60% win rate, then 40% of your trades are going to lose. So if you follow the same logic, follow the same rules, and if a trade doesn't work, then that's your those are your losing probability trades, right? As long as you follow the same logic and the same rules. If you keep plan hopping or strategy hopping, or keep changing your plans and your trades and your rules, then there is no way to measure your win-loss ratio. Okay, the 15-minute candle has closed the doji. It doesn't mean anything. It still means that price could head down because we've closed below. So doji candles are nothing candles. So when I see a doji, it's a nothing candle. So it's as if this candle didn't print. So you look back at the previous candle and read that candle, the previous candle. Okay, let me say that again. Whenever you see a doji, um, it's a nothing candle, right? So which means this candle has no information in it that could be relevant to your plan or the way you trade. There's no information in that candle, not enough information for you to make a trading decision, to either enter a trade or to close part of your trade or close all your trade. That candle doesn't have enough information. That's all it means, right? So when that candle, when you see that candle that doesn't, when a candle like this prints without much information, you consider the previous candle. You look at the previous candle, and the previous candle still tells us that price is heading down. Okay, so we wait. We don't do anything. Okay, I'm going to be here maybe another 5 minutes. I don't want to keep these streams too long. Just hour and a half, 2 hours is the time limit. And if you get a trade inside that, if you get a trade set up, if you get a entry, great. If you don't, then I give you guys ideas of what can happen for the next 2 hours, hour and a half or 2 hours, or maybe even 3 hours. And then, you can see if that plays out, right? Every day, that's what I do at the end. When it's getting to the end of the stream, I share, if not the same, if not the previous, if not the same setup that'll play out, I share another setup. So for those who are trading after the NYSE open, can look for that setup, right? Because the zones are still valid, the zones are still the same, everything is the same. You can look for another setup. So I said it was first buys, and I said is now if we close below, if we have M30 resistance form at a level where there is liquidity, then you can look for sells, and that's what we've done now, right? So for those who are trading for the next 2 hours or next 3 hours, the sells, if price should come down, and then the next setup to look for is buys, again from liquidity, from here, from the EMAs, from either this EMA or this EMA, or from this liquidity candle that we marked here, right? To look for buys to go back up, right? That's the next setup. So when I say these things, maybe if you are just watching and you're interested and you're looking to learn and you're not taking trades, that's fine. come back after a couple of hours or 2 or 3 hours and check the charts and see if what I said happened, if price played out the way I explained it, if the way I said it. And if it did, and if it does that 5 times out of 10 or 6 times out of 10, that means um, you can use that to your benefit, right? You can use it to your benefit to take trades, right? And to make some profit, to learn, to earn while you're learning, right? So um, yeah, because as the reason I say 5 times out of 10 or 6 times out of 10 is because if all the trades that I share, the setups that I share, have positive RR, positive RR trades. So which means your gains on the trade are bigger than the risk that you take, right? Your risk is smaller and the reward is greater. So that's why I call it positive RR trades. Then even if 5 out of 10 times I'm correct, or 6 out of 10 times I'm correct, or even more, 7 out of 10 times I'm correct, then overall in a week you're going to have a net gain. You're going to have a net gain, not a net loss. You're going to have a net gain because they're positive RR trades, right? So the risk on this trade here is about 49 pips, and the reward is about 62 pips. So it's just over 1 RR, right? But if it price pulls back and I get entry here, like yesterday, it pulled back and I got entry, then that risk is, let's say, 26 or 27 pips, and the reward on that is 84, 85 pips. So it's a bigger reward, right? So, yeah, so it's a high RR. That's like 3 to 1 or 4 to 1 RR, or I think 3.5 RR or 3. So basically 3.5 reward to 1 risk. And if it comes further up, if it comes here, then your risk is just 20 pips, 20 pips to 90 pips. So that is a 4 or 5 RR trade, right? Almost about 4.5 RR trade. Okay, so you guys know where the entries are, you know where the stop loss is, you know where the take profit is. This is the setup, second setup for today. And for those who are trading are going to be at the charts for the next 2 hours or 2.5 hours, or who are trading for the next 2 to 2.5 hours, then what to watch for is wait for price to come down and see if there is a setup here that forms to go back up. All right. Okay. So that's going to be here for another couple of minutes, maybe. Yeah, I'll come back in a 2-3 minutes and then we'll end the stream. Okay, so we are heading down. Um, I'm going to end the stream now. Okay, so basically we've done everything that we need to do, explain everything to you guys. So we'll be back tomorrow, 7:30 a.m. EST. Okay, see you guys. Stay safe.